Welcome back, champions. Last month, when I said that Bitcoin would drop down to 90 to 97K range, the reason why I predicted that was because of certain factors. So if you were to go to my website, tradeanalytics.com, you will start to see the reason why I predicted this drop. So let's just go to the one-day chart. And what you can see over here is that there is some signs that there are selling going on within the institutions. This is the indicator that I have in my website that shows that green bars below zero. So this suggests that there is quite a lot of selling going on. And over here, you can see also when price was around 80K, there was buying going on, right? So when the bars are above zero, that means there are buying. Whereas if the bars are below zero, this is a zero line here, that means that there is a selling going on, all right? So let's just analyze this indicator a bit more. So let's just go deep inside this, and I'm going to deselect the... So let's just study this indicator a bit more closely. And notice that when during this month's selling, notice that the signals are very thin and very thin, right? It's not like a very broad signal. So what do I mean by a broad signal? So let's just go back to the 80K Bitcoin bottom at some point around here. So this was the 80K, and that was during March this year. And notice the shape of the buying, right? This is what I call a manipulator, market maker, institutional buying. This green color bars is a very obvious, a very common signal that when a institution is about to buy into Bitcoin, this is the footprint that they leave. So we want to trade together with the market makers or the institutions because they are usually right when it comes to the direction of Bitcoin. So what happened was during 80K, during March, what happened was the market makers and the institutions, they were buying Bitcoin. And this forced the price upwards. If you notice over here, that basically formed the bottom of the Bitcoin, the Q1 bear market, right? So it ended around here, and then it reversed and pumped upwards towards all-time highs. And so notice that there's a little bit of selling going on by the institutions, some point around here, a little bit of selling here, and there's also a bit of selling here. You can see this shape here. So this is a very typical market maker or institutional selling. When you see green bars below zero, that means longs are being removed from the futures markets, right? That means the institutions are removing their longs. They are selling their longs, right? So this is what the green bars represent. And also notice that there are a lot of red bars over here. And these red bars are not market makers, okay? These red bars are they are actually retail traders, non-institutions basically. And they created this signal over here. And when the retail traders are shorting, all right, shorting means red color bars means shorting, right? So when the retail traders are shorting, what happens next? Price will go up. Yeah. And this is exactly what happened over here. So the retail traders shorted significantly at this point around 94K, and the price just shot all the way up to all-time highs. So this is the whole idea behind this indicator. It tells you the market makers activity and also the retail traders activity, right? And we want to follow the market makers. So here you notice there's quite a lot of selling going on. Green bars below zero is selling of longs. Okay, and these are market makers. So they are selling their Bitcoin, right? Over here. And also notice that there's a lot of retail traders that are selling also. And this is a signal over here, typical of a retail trader, okay? So this very thin bar over here, you can see around June, early June, all right? This is a retail trader selling. A lot of selling going on, all right? So what happened during this month was a combination of market makers selling and retail traders selling. So let's go back to the trading view. Some point around May, right? The retail traders were selling and also the market makers were selling. You can see the signal over here is quite small. Let's just go to the 4 hour. from the 1 hour. Yeah. So notice that there were a lot of selling going on, right? Both market makers and also retail traders. So that's the reason why I predicted that the price would drop down to 97K or perhaps possibly 90K. Why do I say 90K is possible? Or at least 92K, because time has passed since the prediction was made. The reason why I say it's possible that 90K could be hit is because of this pitchfork that I've drawn over here. So you can see that I draw from the A, B, C pivot. This is the A, and this is the B, and this is the C. And what you end up is this pitchfork, where price, when it came up from the C pivot, and it went to the median line, which is the red line, it rejected it. And normally when you see something like this, the next target will be the low parallel, which is the orange line. So that's the reason why I said that it's possible that price would drop down to 92K, 90K area. So I'll just remove the drawing that I made. And it seems we have not yet reached the orange line yet. Just bear in mind that it is possible that price could still go down to the orange line some point in the future. I cannot say when it's going to happen, but hopefully it wouldn't happen quickly, right? So violently. So if it were to drop today, it will actually go all the way down to 91K. But maybe if you wait until July or the end of July, maybe the orange line will be around 97K, right? So it really depends on when price decides to go down to the orange line. Yeah, so that's basically the whole idea behind my 90 to 97K prediction for Bitcoin. And I hope you enjoyed this video and you learned a lot. And please like and subscribe if you want to see more content like this, right? Yeah, so I'll see you next time. Thanks for watching.